Hey everyone, and welcome back to the channel. In this clip, Saylor talks to host Natalie Brunell about Bitcoin's role in navigating macroeconomic uncertainty, from trade wars to bond market turmoil. Saylor highlights how Bitcoin's scarcity and resilience make it a corporate lifeline, contrasting with traditional finance's vulnerabilities. He shares strategies for individuals to leverage Bitcoin's potential $13 million price by 2045, emphasizing its unmatched value as a hedge in a volatile global landscape.
It seems like a lot has been happening with the sovereign debts and with the bond market that people weren't expecting. We have a lot of macro headwinds that even Bitcoin, I think, is facing. I'm sure the audience would benefit just from your macro perspective. We have these global war threats and tensions, the trade war. What do you think about that? And how should people look at Bitcoin and how should investors really analyze these concerns?
Well, all of these actions are creating uncertainty in the market, right? Trade uncertainty, operational uncertainty. How do I organize my supply chain? What products should I stock on my shelves? What products should I buy? How long will it take? What services do I need? Where do I source the services? That uncertainty creates massive inefficiency. It creates dislocation. Investors are discounting the future cash flows for the next 10 years of a given business. And so if it's uncertain whether the business will exist and in what form and how profitable it'll be, then they tend to shoot first, ask questions later, or in this case, sell first, ask questions later. Their view would be, let's just back away from the market until it becomes less uncertain. That's what is driving the macroeconomic headwind right now.
Saylor's take on market panic is eye-opening. He nails how investors, spooked by trade wars and supply chain chaos, are dumping assets, tanking valuations for shaky firms. It's like they're fleeing uncertainty. And Saylor gets why. Future profits are a gamble now, but his kicker is Bitcoin. It spikes in this mess, hedging companies like MicroStrategy to weather the storm. That's a brilliant buffer when markets feel like a casino.
Whenever a company runs into a difficult time like that, whether it's COVID, or whether it's the current, tariff wars, it behooves the company to be extremely well capitalized. What you would like is to have a company that has a deep, deep pool of liquid assets you can rely upon, even if your core business revenues get zeroed out. If you don't have that, you're going to go bankrupt in a prolonged crisis. Herein lies the solution, the promise of Bitcoin, and the problem with traditional corporate finance. Traditional corporate finance teaches these companies to decapitalize. So they've all been decapitalizing. They've been surrendering their capital via buybacks and dividends. So when they're not well capitalized, and they run into economic uncertainty in their operating business, that creates extreme anxiety for the employees, the executives, the customers, and the investors. The promise of Bitcoin and the Bitcoin standard is that every company can be well capitalized. Because if you simply start sweeping your cash flows into Bitcoin, or you convert your dividend into a Bitcoin buy, or if you convert your buyback of stock into a buyback of Bitcoin, then your enterprise value over time would double. And your organization would be valued partially on future expectations, but partially on the assets you own.
Saylor's flipping corporate finance upside down. He argues that instead of wasting cash on buybacks or dividends, stacking Bitcoin builds a rock-solid asset base. Half a firm's value secured for crises like tariff wars. It's an insurance policy, Saylor says, letting companies stay calm, not scramble. MicroStrategy's Bitcoin treasury proves it, blending hard asset stability with huge growth potential. That's a daring break from the old finance rulebook.
And so you can imagine when 95% of the value is future expectations. When they become uncertain, 95% of the value becomes uncertain. But when half the value of a company is based upon the assets they own, right, then they have a built-in insurance policy or a shock absorber, and they have the luxury of being able to sit back and see how things work out, but without being desperate or taking short-term actions. And Bitcoin offers one more collateral advantage, which is the more uncertain the operating world gets, the more valuable Bitcoin becomes and the more compelling the idea is, because there are no tariffs on Bitcoin. Bitcoin doesn't have supply chains. It doesn't have all of the regulatory risk, the tax risk, the operating and the execution risk that you have when you have a business based upon providing products and services in a particular way.
You've said that if you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, then buy Bitcoin with someone else's money and lever it. But for the average person watching who's probably a wage earner and not a business leader, what do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead.
Saylor's $13 million Bitcoin price prediction for 2045 is mind-blowing. He's so right. Skipping a Ferrari now avoids a $100 million regret later. That's a pricey mistake. Saylor's advice to keep your day job and buy Bitcoin is a disciplined power move. It's about the long game, letting Bitcoin's scarcity turn small investments into massive wealth. That perspective really makes you rethink spending priorities.
And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage, a 15, a 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
I've met so many people at this conference who have created tremendous wealth just from buying MSTR. How does that make you feel? You've changed lives. I mean, people have expanded their families. They've retired early. That must feel good.
Yeah, it's gratifying when you can help people. And so probably there's no greater compliment than someone says, like, you helped me financially to be secure in the future hopes and aspirations for my family.
This was a fascinating conversation full of valuable insights, but the 3 main lessons from this conversation are: 1. Bitcoin as a corporate lifeline. Amid trade wars and supply chain chaos, companies need deep liquid assets to survive. Bitcoin's appreciating value offers a hedge, unlike traditional firms drained by buybacks. Holding Bitcoin, as MicroStrategy does, acts as a shock absorber, stabilizing value and enabling firms to navigate uncertainty without desperate moves. 2. Bitcoin's resilience in uncertainty. Macroeconomic headwinds from global tensions and tariffs tank valuations, but Bitcoin thrives in chaos, free from supply chain or regulatory risks. Its scarcity drives value as uncertainty grows, making it a compelling asset for companies and investors. This durability positions Bitcoin as a counterweight to volatile markets. 3. Long-term Bitcoin investing. For individuals, Bitcoin's projected $13 million price by 2045 demands discipline. Skip the $100 million Ferrari for Bitcoin buys. Keeping a day job and using long-term mortgage debt to fund Bitcoin purchases maximizes returns. This strategy leverages Bitcoin's scarcity for massive wealth-building potential over decades. So, what do you think about this Bitcoin conversation? Let us know in the comments section below. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking.